Right guys and girls, now let's get into some technical analysis. So we're really going to build the framework here, and as we transition into understanding the simple analysis of technical analysis, we can then build on that with the strategy. And I'm going to teach you how to set up your trading view as well. So you've got your software set up, you've got all of your toolbars, and it's going to be really simple for you to follow. But first up, let's take a look at bulls versus bears. So what does this mean? If you're a new trader, this will be new terms to you. Essentially, the term long refers to bullish market and the term short refers to a bearish market. So you'll hear this a lot. Bulls refer to traders that have positioned themselves long on any given currency pair and they've bought at a certain price point and they're expecting price to move to the upside. Bears, however, they're on the opposite. So they've sold at a certain price and they're looking to hold as they're expecting price to continue to the downside. In any market condition, you're able to trade profitably. For example, if we take a look at USD CAD, if dollar CAD is trending to the downside or to the upside, you can profit from that move either going up or going to the downside, and you'll learn how to do that. So essentially, the balance between the bulls and the bears is the driving force behind the market, and it's why we see these fluctuations in price on a daily basis going up and down, and then we see this on the shorter, medium, and longer term. And we can see this more in terms of the candlesticks, which will show you that shortly. But first up, let's take a look at technical versus macro. So if you're a technical trader, then you'll already understand this. But if you're completely new, there's a few ways that we can look at the market. We can look at it from a technical standpoint, or we can look at it from a macro. Now, some people combine them. What we found is technicals really give you that long-term sustainability. So here at Falcon, we trade and teach technical methods, and we are technical traders first and foremost. Now, you're going to learn how to position yourself almost purely off the technical signs and the chart analysis, which is brilliant because you'll be able to sustain that longer term. Now, as you progress within your trading journey, you'll begin to develop your own sense of market direction. This will just naturally happen. Now, when we look at technical versus macro in a little bit more detail, macroeconomics trading refers to positioning yourself in the market based off of news events and so much more. For example, the President of the United States has a press conference talking about the economy. Traders are watching this news release closely and they will react based off of what is said. Now, often a lot of these things are already priced in and you tend to have things that are delayed and behind. So focusing purely as a technical trader, all we really need to do is just be aware of the major news events, things like Brexit. And even then, our strategy doesn't put too much emphasis on the minor news. This will cause price swings, increase volatility, and we should be aware of it. However, the technical analysis we perform and the forecasts, we look at these things way in advance, and majority of the times the news lines up with the structure anyway. So we focus on the technicals. That's something that we can see consistently repeat itself. As technical traders, we analyze the movement in the markets and the patterns that form. And that is how we can profit from forecasting these moves way ahead of time. We will cover patterns in depth in the course, and this will be more so in episode 3. And throughout the foundation series, we will have laid out the fundamental knowledge for your progression within the market. And then you'll realize why we focus more so on technical. So it's not that news isn't important, just be aware of it, but don't put too much emphasis on it unless it's major news like Brexit and things like that. Now let's take a look at TradingView. So TradingView is your charting software, and we'll teach you, of course, how to set that all up. So TradingView is a website-based charting software, and it allows you to gain access to the FX market in its entirety. It's very clean, it's upgraded regularly, and it has incredible support staff, so you'll be able to be covered there. So if you do want to sign up to TradingView, then of course you can visit the website where you can take a look at all the different pricing plans and things like that. We're not affiliated with them by any means, so you can. It's completely up to you what charting software you use. Some of your brokers will have charting software that you can use as well, but to keep things simple, there's a free version that you can look at as well anyway. But when you first start off, you can start off with a free version, then upgrade if you wish. The truth is, even when you do upgrade, there's small pricing plans of $10 a month. I think is the smallest one, something like that. You got to think about it. When you're investing in your education, what's $120 throughout the year? And I think they do discounts on the year as well. But just understanding having something that has multiple watch lists, all the advantages that the paid one will have. And I've got the Pro Plus, one myself, I believe is Pro or Pro Plus, but essentially it gives you everything you need. But even on the basic level, starting off with a free account, you work your way up, and once you're ready for the paid one, it just gives you a few more features that are very, very beneficial with the trading. But what I want to do now is dig into the platform, teach you how to set it up, whether it's a free or paid plan, and then of course you can dig into that, set up your toolbars, follow along, and I do it very simply and methodically, so you can have that exactly the way that we're all looking within the market. So let's take a look at that now. Right, guys and girls, so this is where you get your trading view set up. Now, if you've been trading for a while, you already have a trading view account, then you can just copy our layout if it's something that you want to follow along with. So, you know, you can have your charts looking exactly like ours. But if you're new to trading, this is the first time, remember to head over to the website, which is www.tradingview.com, and then you can just sign up for their free account. So once you are a free member, what you'll have is this. So this is what you'll see as a free member. And I'm just going to take you through it and just show you the tools that we personally use just to get you set up. So as you can see on the screen here, what we're going to do now is we're going to go over to chart, and it says unnamed here. So you're just going to click on this and it's going to take you to a chart. Now you're going to have pop-ups that come up like this, and they may come up here as well. That's because you're not on the paid version, but just to get you set up, you know, you just have to keep clicking off of them. So what's the first thing we want to do? Well, we want to clean this up a little bit, and firstly, you can decide, do you want white charts, do you want dark charts? Majority of us, we focus on the darker charts, but it's literally your own preference. So if you right click, you can see here color theme. So with color theme, you can keep it light or go to dark. See, I prefer dark, and we're going to clean the rest of this stuff up as well, so you can follow along. So do we need this? No, we don't need this, so we can hide that. Do we need this down here? So I can click on that and just click delete. So that's gone. And we just want to clean up all of this price action here. So do we need any of this stuff here? No, we don't. We can just drag these down. Drag this down as well. So these are out of the way. And now we have our watch list. So already you can see how much cleaner that is. So now what do we want to do next? As you can see the pop up there, these will just come up from time to time, and you just have to click off of them. Unless you just sign up for the paid account. Paid account's not that much anyway, so I do recommend, you know, if you're serious about trading, it's a very, very small investment to have, you know, better layouts, not these pop-ups, and some other features as well. So as you can see here, we want to clean up this watch list. We start from scratch. So as you can see with these here, these can actually be moved around once you create your currency pairs, but we don't want any of these kind of indices or stocks or anything like that. So we can click off of all of them, and I'll show you how to enter the ones that you could look for. So our watch list is clear at this stage, but before we, you know, find any currency pairs or anything like that, we want to visually make this look better. So what can we do first? So first up, let's go to the cog here. As you can see, chart properties, and we're going to go to vertical grid lines. All you need to do is take it from 100% to 0. As you can see, they started to disappear. Now, before we click OK, we're going to go to the horizontal. So if you do the same thing, drag it all the way. As you can see, much clearer now. So already, you've got your charts nice and clear, and we can see the price action just looks so much neater. So this is just the bare bones of what you want it, right? You want to keep it as simple as this. This line here, you can either choose to take that off or not. It's literally just the price line. So if I just zoom in there, especially if you're a beginner, you probably might want that on there. You can literally see on the price line, it's telling you where the current price is. So you can keep that on there, you can turn it off, it's entirely up to you. So now what we want to do is get our time frames. So as you know, we focus on the weekly, the daily, we focus on the 4 hour, the 1 hour, and the 15. So you see here, as you can see, these are the time frames. So I want you to start favoriting these. So then you've got this set up. So some people use the monthly as well, it's entirely up to you, but to keep it for simple sake, you just favorite, just click the star on any of these tools. So 1 week, 1 day, 4 hour, 1 hour, and 15 minutes. So as you can see, that now appears here for just short codes. So if you want to quickly go to that time frame, you can do it here, or you can type it. So for example, we're currently on the daily chart. As you can see, it says D there. If I wanted to go to the 4 hour, what I could do is on the keyboard, I could type 4. See how it comes up straight away, 4 minutes. If you just put 4, if I put H, 4 hours. I click enter, I've now gone to the 4 hour time frame. If I press 1, H, now it skips to the 1 hour time frame. So you see how we're going through there? So it's just a few short codes that you can look at, or you can just click them individually. Now if you want to scale it, if price goes a little bit messy, you can always click auto and it just scales it for you, and you can utilize these points to kind of move in and out to condense your chart, or just scroll in and out so you can actually see the picture and just pan across. It's really simple and you'll get used to it very, very quickly. So now we've got the time frame set up. Now let's get our toolbar. So your toolbar along here, you can see there's lots of different features, and you just want to focus on the simple ones, the ones that you're going to be using, right? So let's set those up and favorite it the same way that we've got on our time frames. So again, just have to click that off. So first up, we're going to go for trendline tools. So as you can see here, trendline tools, and we're going to favorite trendline because we need the trend line. What else do we need? Do we need a horizontal line? Do we need this? No, we don't. We just need a horizontal ray. That's what we're going to be utilizing. And we can also have arrow as well. So those are our first three that we've got up there. Then we're going to get our paintbrush tool. So the paintbrush tool, this is what you're going to utilize for your forecasting and predicting moves, and you're going to utilize that to your advantage. So you've got that there. And then now let's go into this part. As you can see here, so you're going to have your long and short and lots of different things here. You're going to utilize this part. It's going to be huge for you to size up your positions. So we're going to have long for, of course, buying positions, and then short for selling positions. So as you can see, each time I favorite it, it just appears in this toolbar that you'll have saved. We're also going to utilize price range. This is always handy to measure how many pips there are in between your particular area for you to work out if it's something that you're looking at. It's just an added thing there. And also bars pattern. This is one that we use for our forecasting to replicate price. This helps out massively. And of course, you'll learn a lot more about how to utilize these as we get on with the strategy. But I'm just getting you set up for now. So just follow along and make sure you've got these ticked. So we have that at this stage. And let's see if we can add anything else that might be handy, especially if you're a beginner. So this is where you can add in your annotations and your notes. So you can choose literally each one of those are fine. So let's say, for example, we went with balloon, and you can utilize those as well. So what do we have? We have our trend lines to draw in our structure. We have our ray lines as well for drawing parts of our structure. We have our arrows, you can use that to indicate where you're looking at. We have our paintbrush tool. This is of course to show you, visually what we're looking at, what we expect. You have your long and short positions, so just to size up your trades. Price range, just to measure the distance. Bars pattern will be a forecasting tool that replicates price. And then you have your balloon, which is just for your call out. So now we've got your toolbar set up. Now remember, this isn't the perfect toolbar. Everybody's going to have slightly different things. I'm just giving you just the bare basics. If you're new to Falcon, new to Forex in whole, this is all you need right now. You don't need all these other crazy things. You just need the simplicity to focus on. Now, of course, feel free to, just go through. You might find some other tools handy for yourself as well, just like other arrows and things like that. Now let's get currency. So let's say you're creating your watch list and you want to find a currency. Let's say we go with euro dollar. You type in EUR and then USD. So euro over the American dollar. And as you can see, you get different bits of data here. So along the side, see how it says FXCM, it says Oanda, SEE, Forex.com, etc., Saxo Bank, and it goes on. So we tend to focus on FXCM or Oanda. It depends what broker you're with. Let's go with Oanda for argument's sake now. So Oanda here, if I click on that, now it gives me the euro dollar chart. See here on the daily, I can click here to the 4 hour, to the 1 hour, I can change time frames or do it with the short code way like I showed you previously. So now we've got this. If you want to add in something else, let's say pound dollar, GBP, USD, then we look, Oanda again, you start to build your watch list. Let's say we want euro pound, GBP, Oanda data. So as you can see, you can just click through. Let's say, for example, you want to move these around and you want this in order. You can do this. You can have it in order like this. So euro pound, euro dollar, you might want to change that around. As you can see, really easy to maneuver this around as well. Let's say, for example, you want to separate your watch list as well. So what we have is something called a top 6 in Falcon that we focus on for the week ahead. What you can do is actually type in TOP 6 and then press enter, and it will come up like this, right? So now you can separate that. So let's say you move that up like so. So for your watch list, it now says top 6. Let's say, for example, we can put in a few more pairs then. We can put euro over the Australian dollar. Under data, we can put euro Japanese yen. and we'll put USD Japanese yen. So now we have 1, 2, 3, 4, 5, 6. We also have something called wildcards. Wildcards is just, sometimes 3 to 4 different pairs that we might be looking at that are not ready yet. So what you can also do is type in wildcards, like so, enter, and this is all that it gives you there as well. So you can either keep it like that, or you can, let's try another one as well, just for argument's sake, you can just do WC, and then you know that as wildcards. Right, so your wildcards are below here. Let's say for your wildcards might be, let's take a look at another pair. We could have EuroCAD. EuroCAD, again, Oanda data, and you could have pound Aussie, and we'll do one more, pound New Zealand. So now what do we have? You've got your top 6, 1, 2, 3, 4, 5, 6, then you've got your wild cards, you've got 3 other pairs. So why would you do this? Well, it just separates it, and it's really good for your psychology, knowing that, right, this is my top 6, these are the 6 I'm going to focus on, these are the wild cards. Let's say, for example, you might be looking at dollar yen, but your original forecast is that there was a trade coming. Let's say something changes, as that can happen in the market all the time, that doesn't materialize, and you have something in here that may be not ready yet, but then materializes in a couple of days, then you've got your wild cards. This is to stay really efficient. Rather than having all of your pairs clustered here, trying to click for every single 28 pairs, you don't need it. You need a tailored watch list, which you're of course going to learn. So literally, this is the simplicity side of things, getting your trading view set up. All the other things you'll learn along the way with how to utilize other features like back testing. There's other videos that's going to show you exactly how to do that. But to get your charts looking like how we get them, this is exactly what you do. Now I'm just going to take you through now very quickly a few of these features, how to use them. So let's say, for example, you've got your watch list. What you can also do to toggle this, if you don't want this here, you can literally click that and it expands the screen, click it back, and you've got it here. So now let me take you through a few of these toolbars before we finish up. So we want to start off with trend. So let's say we want a trend line. We're going to connect these. As you can see, it's very faint, so we want to customize this a bit. So you can double click and you can see the color here. What we can do is we can change this color. So let's say yellow, we can change the thickness. So now it's thicker, it's clearer. Okay. Now let's say, for example, we wanted to utilize the ray line. We want to look at the previous high here to measure if there's something that we can look at. So we'll get our ray line and we'll pop it on here. So for those of you that trade support and resistance, you'll have a line going all the way through. Now we don't utilize support and resistance, we utilize price structure and patterns, and we see each section as one piece of its own, which you're going to learn more in the strategy part. But just to get you set up, we focus on the most previous bits of price. So the same like in support and resistance, you see a double top. You might see a double top here, for example, right? And you had price going through here, but then this part is not relevant to that part. And as you can see, it just breaks straight through. So we focus on the most recent price. So now we've got a rejection here. We would see the double top within this section alone. So that's all it is. And we utilize the ray lines to be able to help us with that. So as you can see, we've got this here. Let's change the color. Let's say we go with blue, right? And we want that to stand out a bit. So make it thicker. Perfect. So now when we do our trend lines, we've got yellow. So if I want to do another trend line, right, and I wanted to go from here, for example, and put it on, then it's yellow, and I match it up. And then if I click on it and I click delete or backspace, then it's gone. So it's really easy to maneuver. You can just adjust, etc., like this to keep it simple. So we have ours to the wick. So what you're going to learn with drawing trend as well, which is important. Now, just understand at this stage, everything you need to know will be in episode 3 in terms of strategy, trend lines, all that stuff. But I'm just giving you a brief understanding here. So right here, as you can see, we're drawing them to the wick. And the reason why we draw our trend lines to the wick is because it gives us the most accurate point of price data. This helps us to understand what pattern we might be in. So we literally go from the wick. Some of you might go through the body and things like that. We don't, we go to the wick. Unless there's a huge bit of volatility and it doesn't make sense, that's when we adjust it and we use our initiative. But to keep it simple, you're going to go from the wick and then you know, right, that's the bit of price action that I'm on. So that's that part. Let's say, for example, you wanted to do a forecast and you thought you're expecting price to go back to here before it continues its trend. So just like you saw in the lesson, as you can see, move up, move up, move up, correction, then it continues its trend. Let's say we was going here now. You can utilize the arrow to give you an indication for yourself to say, oh, this is what I expect, to give you an indication. Now we can make those arrows white and we make them thicker. As you can see, that looks clearer now, right? And that's just a quick, annotation for you, so you're prepared, thinking, right, this is what I'm looking for. Move up, a correction, and move up, a correction back to here. So now we've got our arrows, paintbrush tool. This is a good one. So if I just move around, as you can see, that's very faint, isn't it? So let's double click that. We want to make that clearer for sure. Let's have it white. You can have it blue, whatever you want. Make it a little bit thicker. Right, so now, just delete that part. And we'll delete the arrow. We can utilize the paintbrush. So when I click on the paintbrush tool now, I can then draw. So let's say I'm trying to replicate a correction. I can draw it on just to give me an indication, thinking, well, this is what I expect, then a breakout. So here's the move up, here's the correction, here's the continued trend, here's the move up, here's the correction, and we have 1, 2, third touch. So this is the third touch of the trend. So we're trending to the upside. So this is our bullish trend. And what you can do is actually, if you want to delete things, right now I'm using Command Z, and as I keep pressing on the keyboard Command Z, see how things disappear? So you can delete it very, very quickly. So there's just a quick short code there. And now let's move on to the next part. So we have our paintbrush tool. Now we've got long. Let's say, for example, we was looking for a position for a buy, and we was looking for it here. What we can see here is that we have our long and short tool. So for long, let's say we had a stop loss of, say, 40 pips. As you can see, I've moved it to, see how it says 0.00403. Forget about that last decimal place. You're focusing on these decimals here. So you're focusing on the 40, so that means 40 pips. If I extend that, you see how it moves up, Now we're going to 490 at the end, that's 49. So forget that last zero, that's not the decimal place you want to be focusing on. So as you can see, 49, 50. So now we're at 50 pips. If I drag it down there, as you can see, it says 851, but forget about the one, it's 85. So it's just helping you figure out, what stop loss do I need, what pips do I have? So you understand the pips. So let's say 40, that's 401, but this is 40 pips. Now, let's say, for example, we had our target originally up here. What do we have? All you need to focus on is this part here. So you see where it says risk/reward. Your risk to reward will be determined by how big your stop loss is. So if our target was here, you can see that 6.72. So we're risking 1%, and our gain, if we hit our target there, is 6.72. So that's what we're expecting. This is what we're looking at. Now let's say, for example, this trade required a slightly larger stop loss. So you can see the 6.72 there. Let's say it needed a 50 pip stop. What would I have to do? I'd have to move that down to around 50, right? So at 50 pips, so you see how we've changed now. Our risk to reward is less. It's now only 5.3. Why is that? It's because our stop loss is larger. So this is just the simplicity of working it out for you. So as you're trading, you can utilize that to size up your positions and see, what is the risk to reward? What do I expect? So real simple stuff. So that's it for the long tool. You can click and delete that. Also, one thing to note as well, actually, just putting that back on, if you want to lock things in place, you can, let's say you had your original target, you can click on there, and in the properties here that comes up, you can click lock and you can hide it. Now, so how do I get that back? Because you might want to record all your trades on TradingView. Well, you simply right click and object tree, and you see how that's come up for you now. You unclick it, there it is. Now, I can't move that because I'm panning with it, right? You then unlock it, and then you can do what you want with it. So just a tiny little tip there. And for the short, it's exactly the same. Let's say, for example, I'm expecting a sell setup and I want say a 30 pip stop. As you can see, 30 pip stop. Our target is down here to the low. You can see pretty much 9.5%. Let's say I needed a slightly larger stop loss at 40 pips. Now it's changed to 7. So it works out for you. Real simple stuff. So just utilize those tools. So long and short. And then the price range, again, this is just a handy one. You don't need it, but let's say you was buying here and you just wanted to see, how far this was. Or let's say you're selling here and you wanted to see what the distance was very quickly. If I click from here, it measures it for me. So to here I can see it's 156 pips within that gap. So I'm not focused on the last decimal place there. So I'm looking at this. So I'm looking at 2156. If I extended that, as you can see, going up, Now it's 200. I expected here 54, 50. So you see, you can just utilize it. It's just a handy little tool. Not everybody uses it, but I've always used it for years. So I thought I would share with you that one. And let's do this one. So this gives you a good indication. Let's say, for example, like the paintbrush tool, you were forecasting, right? You was expecting this to correct to give you an indication. You'd write that. So now you want to get more of a visual representation of what that looks like. You take the bars pattern. Now this, you can click on any bit of price and it will replicate it for you. So if I just take that bit of price and I click here, what do we get? It's taken a dummy bit of price, and you can adjust this ever so slightly. Why would you use this? Well, if I put that there, that now gives me a visual representation of what price may look like, and I can kind of draw in, well, that's what I would do, that makes sense, and now I can utilize my arrow and say this is what I expect. So now it gives you more of a visualization, if you like, what price actually looks like, which gives you an indication this is how I'd actually take the trade. So now you've got the upward trend, the bullish upward trend, move up, the correction, the move up, the correction. So impulse, correction, impulse, correction. And now you've put your forecast on utilizing the bars pattern. Now, of course, just like anything, you can change the color. So say if you wanted it purple or you wanted it blue, you could have it whatever color you like. You can even have it yellow, right? And then click OK. And then now you've got your forecasting, right? And you can take it for any bit of price. If I wanted to grab this bit of price here, I could grab that and put it there. You can size it up to fit to give you an indication of what that looks like. So the tool is beneficial because you can go and find bits of price that repeated itself last time, and then you put that bit of price in there to give you an indication, right, that's what I'm looking for. So then when you're working in a 9-to-5 job or your business or whatever you have, you're now planned way in advance and you have everything laid out for you. So that's how I would personally utilize that. So very simple. And then the last one is the call out. So you can literally comment. So let's say, for example, you was looking for a risk entry. You can just type that in and you can change whatever color you want. You can make it green, you can make it white, you can make it black, for example, and you can change all the borders. You can just play around with this stuff, but let's say, for example, I've got that. Now I can click on this and have it here as a tool. So if I wanted to take a trade, I might have the arrow on here like so. I might be expecting a downside move, and I just wanted to put this on to remind me. I can see, right, I'm looking for a risk entry at this top here. I've utilized the ray line. I've got my bullish trend, 1, 2, 3, and I'm expecting the sell setup to break the trend and then move to this low, which I might want to put on another ray line here to target it, because then I can see, right, this is my target, and I'm keeping things simple. So as you can see, charts are simplistic, very, very easy to understand, and you can utilize these tools to your advantage. And then again, you toggle here to go back on. You can see your chart set up. So from when we originally started, you know, it looked like a lot of mess. Now you can see how you can structure things. Very, very simple. So now you've got your chart set up, guys and girls. I hope you can keep this as simple as possible. And again, you can play around with all of the features. And again, if you ever need any help, feel free to reach out to myself or anybody in the Slack community, and we'll be happy to assist you with your layout. Right, so now hopefully you're set up with your trading view and you've got all your toolbars ready and you're ready to get going. Let's actually take a look at a little bit more of technical analysis. So first up, we look at rays and trend lines. So what are rays and trend lines? Rays and trend lines are what we use to structure price action. But firstly, let's start off with the basics. What is a trend? The market either moves up or it moves down. When the market is rising on any given currency pair, that is considered to be a bullish price movement. Similar to when the market is falling on any given currency pair, that's considered to be the bearish price movement. Essentially, a trend is price moving consistently in either one of those outlined directions, either to the upside or to the downside. But what is a ranging or consolidating market? If price action is not trending bullish or bearish and it's moving sideways, this is what we call consolidating, ranging market, or simply just a correction. What I want to do now is show you just a quick mini lesson, a little bit more in depth on what that actually means. So let's take a look at that now. Right, guys and girls, now let's take a look at a simple mini lesson on trend. So you may have heard before if you've already been trading for a while, but if you haven't, what does this mean? Well, we've got a slightly different take on it, and I'll explain more when we get to this part here. So let's firstly take a look at bullish trend. Now, it's important to firstly understand that when we're looking at trends, these patterns and these trends, this can be applied to the higher time frames and the lower time frames. So we look at it all. But firstly, simply, let's take a look at a bullish trend. So what is a bullish trend? Essentially, we're looking at where the momentum is going. Now, how do we know it's a trend? Well, we don't know it's a trend until we actually achieve a certain few touches that we can see it's moving in that direction. And what you'll naturally see is this. You'll see heavy momentum in one direction. It's not always in one candle, but in one big direction. Then we'll see a sideways move. This is normally counter to the trend, either sideways or it gives a more of a steep angle like this one up here. They can come in various forms. Then that continues and then pulls back to the trend. So as you can see here, 1, 2, 3, we're now trending. What is also important to understand, does it mean that we've broken the trend? Let's say if this price was to go slightly through, does it mean that we've broken the trend? Some of you might think so. We have a slightly different take on it, and this is what you'll learn more in episode 3 on understanding the nature, the true nature of the market. And what this means is, when price goes through, we ask ourselves the question, how did the trend line break? Because you've probably seen before, when you've drawn trend lines before on your charting software, price goes through and it breaks straight back in. Have you ever experienced that before? And if you have, you're going to absolutely love episode 3 when we break down the nature. But simple terms, trend is literally looking at it, what is the dominant direction? Move up, which we refer to as an impulse, sideways move, which is a correction, impulse, steep correction, and then we're continuing with that bullish trend. Very, very simple. Now let's move on to the bearish trend. This is of course just exactly the same in reverse. We're looking at the dominant move down, counter to the trend, dominant move, counter to the trend, and then we're continuing within that fashion. So it's exactly the same thing here. But the real thing that I want to explain is this. This is very, very important. Now, as you can see, this channel that you can see here, this is what we would call a sideways correction. Some people would call it mess. Some people would call it a choppy environment. Some people would even call it a ranging environment. What we call it is a correction. Now, these corrections, as you can see, this channel is this channel right here, as you can see, right? This is that form of that. This can be a larger one, this can be a smaller one. But what's really important is that this gives us an indication as to what's happening next. And what I mean by that is take this channel and put it there. What do we expect? Where did we come from? We came from a dominant move up, we established this correction, and then we continued. Now if we put that correction here, we came from a dominant move down, we've got this same channel, and then where do we go? We continue. So it actually gives us an indication as to what's to happen next, where some people might see it as chop or sideways, ranging, messy movement. We see it as a bit of an artwork that we can figure out what type of pattern is it showing us and how can we benefit from that. Now, can you trade within this? Because sometimes these ranges, they're very, very large. I mean, we could be looking from here to here at 1,000 pips. So understanding the amount of percentage that can be made between here can be very, very large. So can we benefit from it? There's actually a recent trade on euro pound that we took, which was very similar to this, where it just broke above here and then we dropped to the downside. So if we look at this on a weekly scale, then of course, yes, of course, we can still benefit from that. But as you can see, this can apply to the lower time frames, the higher time frames, and you can benefit by understanding what this means on a bigger scale. So hope that gives you just a very, very brief understanding. Of course, you can see visually on the charts a lot clearer. Bullish trend, bearish trend, and correction, which is just a sideways movement. But you can see this component is very, very beneficial to understanding the next direction. So guys and girls, keep it simple. Now you understand a little bit about raising trend lines. Let me show you visually on the chart. So firstly, let's look at the bullish trend. So bullish trend, if we take our trend line and we take a look at the market trending to the upside here, as you can see, starting our trend to the upside, what do we have? We're going to utilize the paintbrush tool here that we've configured to look at the price. So we have the move up, we have the move counter to the trend, we tag the trend line, we move up, we pull back to the trend line, we move up again. And at this point, I want you to understand, so how do we know we're going from a bullish trend to the upside or to the downside? Well, firstly, you need to understand, why is it important for you to know the trend? Well, they say that the trend is your friend in trading, right? Now, although that you can trade, counter trend, and that's fine, ideally, you want to trade in alignment with the high time frame structure, where it's trending. And all it means is you just want to trade with the momentum, right? Rather than swimming against the current, you want to swim with the current. So looking at it like this, once you know what trend you're in, you can take advantage of those opportunities. If we're trending to the upside, then we know we can look at buying opportunities, which just gives us a high probability of the momentum continuing in that direction. Now, as we're trending to the upside here, how do we know a trade is, coming to an end? How do we know that the trend is potentially reversing to the downside and creating a bearish trend? Well, this is where the ray lines come in. So if we take price back to around here. So at this point, we have our move up, our correction. So we have our impulse, our correction, our impulse, our correction, our impulse, and we're expecting a correction. Now there's only one thing that you don't know. Nobody knows when the trend is exactly going to come to an end. You have to understand that you take a message from the market to know that. So for example, we could correct, move up, and we could keep trending to then eventually a drop. So as we play out in a bit more detail, now we've moved off, we've got the high here. We can utilize this as an indication, well, there's a few things that can happen. This can be the correction that comes back and trends, or we may move down, create a double top, and then break the trend and start forming a bearish trend. But we need a bit more price action before we, can understand that. So as we go a little bit further, right, so at this point we can clearly see we've moved away. This is the high that we can focus on. So we grab the ray line tool and we utilize this as an indication. So now that's a reference area for us to see either creating the same type of price action that can break out to the upside, but we'll be aware of the high, or we create an obvious double top that could be the momentum that breaks the trend. So as we play out a bit further, we move back up, and as you can see, we're now approaching the double top area. This is clearly a double top. Look at the difference between this. Now you're going to learn more about these price structures and patterns in episode 3, but I'm giving you a very brief insight. As you can see, the tight consolidation, the move up. The tight consolidation, a steeper correction, the move up. Here is the obvious gap. This could indicate this double top, selling pressure, and the trend is coming towards an end, but we have to first break this trend, form a particular pattern as confirmation, then a move to the downside would then be confirmed. So now we can take a look that this could still potentially be part of a correction, but we break. So now we've broken. Does that now mean that we're in a bearish trend? Not just yet. We need a particular pattern to confirm that, which is continuation. And again, you'll learn more about that in episode 3. So as we play out, let's see. So we're moving now, we're now forming some type of structure. Now we're moving up. So as you can see, we've now had our pattern here. So we've had our continuation. So is this now an indication? Well, only once we've impulsively broken out of this structure here on the weekly or the daily chart. So now we've done that, we can take our trend line here and use this as a point of reference. Now, trend lines are not absolute. It's not so much that you're trading the trend line, it's more so you're using it as a guide to see whether you're in a bullish trend or a bearish trend. Because trend lines, they can be broken. We're not here to marry our trend lines, we're here to utilize them as a guide. It's the nature and the price patterns, which you'll learn more about throughout the course, is what we focus on. So now we have the start of our bearish trend because we've got confirmation of that. Now you can rein in your trend line, or you can completely delete it. It's entirely up to you because we focus on simplicity here. So now what we can do is see price play out a little bit further, and we're starting to form another structure. As you can see, now this is the start of forming another version of this, as you can see. So we have our move down, we have our correction, we have our move down. This is the start of our correction. So what would we utilize? Well, we can utilize our ray lines short term and longer term. So we can put our ray line on here as a point of reference to form another pattern. As you can see, we've then got this mini double top, very similar to this double top price action, but a lot closer. Double top here, started to break down, and then we start our move to the downside. So now we have another correction. So we have our move down, our corrective structure, our move down, our corrective structure. So you see how this one doesn't go to the trend line. The trend line is just a guide to indicate we're in a bearish trend. We're not always going to pull back all the way to the trend line, and sometimes we're actually going to break the trend line ever so slightly and then keep moving lower, and then we adjust our trend line, which again, this is about evolving with the structure, which you'll learn more about. So now it's about thinking, well, what happens after we've got a bullish trend, a bearish trend? What if we're moving sideways? What can we learn from this? Well, you can see this. As price develops a little bit further, let's see how we play out. So we're moving. As you can see now, we're utilizing this area as, well, is there a potential double bottom? Well, what's similar? What can we learn from? So you can see how we have this obvious big U shape, this arc, big arc here. What do we have here? Very similar. Now, we don't always get all the way to the double bottom. We can get very close and then start to push off. Now, what's interesting, what I want you to learn here is that if we know something's coming to an end, what do we need? We need a confirmation, and the confirmation is what you can learn from this previous price structure. So notice how we was in our bullish trend, price moving up, counter to the trend, price moving up. We then break the trend. What do we get? We get a continuation pattern to confirm the bearish trend. So what would we need here to confirm potentially going from a bullish trend to a bearish trend back to a bullish trend? Or we could potentially be moving sideways. So let's see. As price plays out, we then start to break the trend line. That's absolutely fine at this stage. We need confirmation. Have we got confirmation yet? Nope. So now, as you can see, price is just moving sideways. So we're now more so in the arranging market. And the reason why we know this is because there's been no confirmation. So this is a good indication that price is in a consolidation, it's an arranging market. So we can remove that, remove this part and clean up the price, see it for what it is. This is a very valuable lesson. So now we know we've trended to the upside, we've then trended to the downside. What did we have here to confirm the break of the trend? Well, we had a continuation pattern. Have we had a continuation pattern on the break of this to confirm the uptrend? We haven't, right? So we haven't seen a continuation pattern to confirm it. And if we haven't seen a continuation pattern, then we know that price may be forming a ranging market or a bigger consolidation or a bigger correction, as we call it. So we can rein in the trend line and then look at this bit of price action for itself. So now you can see price is now moving which way? It's moving sideways rather than trending to the upside or to the downside. Another great indication of this is looking to this area here. Notice how price action, if we take this completely back, the price has just moved sideways ever since now and formed different types of patterns that of course we can still profit from, but it's not in a very clear uptrend or a clear downtrend. Now you can see, if I take price back from here, what was price doing here? Price was forming what type of market? Is it a bullish trend? Is it a bearish trend? Or is it just consolidation? As you can see, we can put on our pattern. We can box that off essentially. We can clearly see prices contained within this type of structure. As we start to play out, we can correct. This can last a little while, right? These corrections can last. Nobody knows exactly when something's going to go. We need confirmation beforehand. So now we've broken out. You can see we've clearly broken out. We need some continuation, right? And there's all different types of patterns that can form that. Now it can take a while to do that as it starts to form its corrections, right? So we had some solid breakouts, and on the lower time frames, you'll find some continuation patterns, but the real solid continuation that started to form was here, as you can see, right? Now these can develop for a long period of time. They can develop larger structures. So it's really important to let price play out. And sometimes that can take a little bit of time. And as you can see clearly, this is forming a much larger correction. And then we break out. So now we can start to confirm that we're in our bullish trend, as you can see. So we're in our ranging market, we have our impulse up, our continuation to confirm that, and then we're starting our trend. So it's just about understanding those things. Now you can profit either way. Now even within a ranging in a consolidating market, you can still profit. That is the key thing. There's lots of different variations and patterns, even for short-term trade. Now of course, it's nice to just trade with the momentum because you've got the momentum on your side, but it's also important to understand that you can really take advantage of these opportunities short-term with short-term buys, short-term sells. But how you do that is on the lower time frames, going to the daily, the 4 hour, the 1 hour, and anticipating these moves with particular patterns that we focus on, which you're going to learn all about in episode 3. So that is just simple price trend and structure and how we utilize our ray lines in the short term and in the long term. Right, guys and girls, so now you understand more in depth about rays and trend lines. You can see why we use them and how we use them, and you'll learn so much more when we get into more of the patterns in episode 3. But next up, candlesticks. You may have not heard of candlesticks before, and there's so many different candlesticks, but it's really, really important to know what they mean. So what does a candlestick shape represent or mean? Candlesticks are the contents that make up any given chart, and they're a visual representation of the price fluctuations that occur across the market. In order to fully understand what a candle is and what it represents, we first need to understand the time frames. So remember that the Forex market, it's open 5 days per week, 24 hours a day, and it closes on the weekends. Prices are moving and they're being affected by traders buying and selling around the clock. The market is constantly moving and prices are changing. This helps us understand the purpose of the timeframes while analyzing the charts. In Falcon, we use the weekly, the daily, the 4-hour, the 1 hour, and the 15-minute timeframes to understand what visual representation that we're looking at within the markets. What I want to do now is actually show you the different candle shapes, and so you can understand the different meanings of them. It's really, really important to understand that candle shapes are important, but it's structure first. So if you remember, structure first, candle shape secondary, and the candlesticks can really, really complement what we're already looking at. So let's take a look at a mini lesson on what candlesticks that we focus on. Right, guys and girls, now on to candlesticks. So you may have heard of candlesticks before. Now there's lots of variations of candlesticks. This is not all of them, but these are the main ones that we actually focus on, that we combined with our structure. Very, very important to understand the importance of them. So structure first, candle shape secondary. Implement that into your trading and you'll realize how it'll benefit you. Why? Because we could look at these individual candlestick formations and patterns and realize that if they're not in the right area, they're of no benefit to us. If anything, they actually encourage us to get into trades a little bit early, and that doesn't really benefit us. So it's about understanding that if you don't really know where they're positioned within the market, that can actually harm your results, put it that way. So we want to establish where would we use them and what do they mean. So I'll take you through that. So first up, we have the high test. This is, of course, a very, very popular candle shape formation in which that I really enjoy. A lot of traders will as well, but in the right area. So if you imagine if we're halfway within a move and we've got a random high test, it's not necessarily going to benefit us. However, if this is at the top of a structure and we're looking for short positions, structurally we have our pattern to support that, and we see a high test candle, what does that give us? It just stacks everything on top, gives us more confluence, more evidence that we may be moving to the downside. So this is more of a selling candle that we're looking at. Then we move to the reverse. This is the low test candle. And again, seeing this candle shape at the bottom of a structure, let's say we have a double bottom formation or a different price pattern, and within that we've got a nice rejection with the low test. So we can see that price originally was here, we've rejected, we've pushed back up, and we're expecting this to springboard to the upside, but only if it's combined with the pattern. Now we go towards the doji. So doji, you may have heard of this. You'll see that the open and the close is very, very close together. You can see the wicks either side. Sometimes they're slightly smaller, slightly longer. Now, how do we benefit from understanding a doji? Well, quite simply, where we really want to look at these at ends of a trend or a pattern. So let's say, for example, we was looking at an ascending channel. We're looking for a sell side, we're looking for a short. And then what we see right at the end of that is a doji formation right at the top. We're already looking for short positions. And now we've got a doji to confirm that we've exhausted, maybe a bit of indecision, and that we're looking at a potential reversal. But if you're looking at it from a point of view as the candle is going to give me my entry point, you can use that, but only if the structure is already supporting your idea. So that's how we use it. Then we move on to the high test candle with 2 in a row. So what does this mean? Tweezer tops, you may have heard of it before. And essentially, when it comes to the tweezer tops, all this essentially means is double confirmation. This gives us more, because if you think about it like this, what's happened to price at this stage? We've moved up, we've rejected, we've come back down, and we've closed down here. We've done the same thing twice. So this is another reason to getting people caught on the wrong side of the market, especially if it's in a prime area for us to sell. So these are the ones where we're setting our entry just below, and it's a very, very strong indication that we're going to get some downward pressure. Same in reverse when we look at tweezer bottoms. So if you're very, very new to candlesticks, we're looking at the same thing. So if we've got these and we're looking for a buy setup, this is perfect. This gives us a strong indication that we set our order just above and we're looking for long positions with our tweezer bottom. So just more confirmation. Now when we're looking at the next pattern, now we're looking at a bullish engulfing. This is a great way for us to combine a few things. You're going to learn more about this in episode 3 with patterns and how we get into it, but this is really, really great at the end of a trend as well. So let's say, for example, we're looking for some buy setups and we see price kind of trickle their way down. They're going slowly, slowly, slowly. We're not always going to get, the perfect low test or tweezer bottoms or doji. Sometimes you'll get this type of price action. And what will happen is that price will engulf, which is the name bullish engulfing. It will engulf above, close above. this smaller candle here. And what that naturally means is, let's say there's a bottom, we're looking at a double bottom, and then price moves all the way down, and then we reject off of here and we move back up. This is a strong indication that we was already thinking this will reverse anyway, and now we can look for any kind of price patterns on a lower time frame to actually look for long positions or actually buy just on the break. So very, very good price pattern that we see. Now we look on the flip side, which is the bearish engulfing, and as you can see, it's just the opposite for that. So if we were looking for sell setups, and then we don't get the high test, we don't get the doji or the tweezer tops, and then we get the bearish engulfing. So at an area at the top of the structure, we've got an idea that we want to look for a sell. We get this small candle here, and then we get a bearish engulfing and it closes. Then we look for our entry point. So another strong indication that will help support your overall trade idea. Now I want to move on to the next one. This is very popular, to Falcon. And this is something that I developed over the years, and I spotted it helped my trading. I used to use it as a management tool, and I still use it as a management tool, but it helps with entry as well. So you can kind of use it for both. So if we look at the 1 hour retrace, imagine that we're looking for sell setups, and that right at the top of the structure, you've got a little bit of momentum here, and you might be thinking, I don't want to take the trade right now because there's no real rejection there. And then what happens, you'll see on the 1 hour retrace, the body, the wick, they'll be very identical, pretty much together. They're not always exactly the same. I mean, this can be a little bit longer, a little bit shorter, but a lot of times we do see them, they're almost identical. And what this is a strong indication that price has moved up. It's a false move up. We've completely retraced and we're actually coming to the downside. So then we set our entry just below on the break to trigger us in for the sell. Now, I alluded to earlier that this can be used for management and entry. So what would I mean by that? Well, imagine you was buying from the bottom, prices move up, it moved up, and you had an area for a target, but you weren't sure whether to close the trade for profit, or this may potentially just keep on going. How would this help you? Well, if this retraces back down, you would then lock in profit just below, and if that happens, you're essentially being taken out of the trade where sellers would come into the market. So you're maximizing your trades to get as much profit as possible, utilizing candle shape formation with your overall targets as well. So that helps out a lot. So that's the 1 hour retrace. It can be used for both entry and management. We love it for both. Now we go on to the hanging man. You might think, oh, that looks quite similar to the low test, and it is. And the reason why this one's important is it's not very, very common. We don't use it massively, but it's still there. And essentially, if you would look at this on a double bottom, we're looking for a buy, perfect. But what if this is at the top of a structure? So we're looking for a sell. So what candles would we be looking for with the structure? Doji, high test, tweezer tops, retrace, etc. But what about this one? So if we're looking for a hanging man, right at the top of the structure, this is a strong indication that we're actually going to sell off. So this in the right area is actually acting as a sell setup. We don't see it very, very often, but it's important to understand that you cannot be put off by that, right? So if you have an ascending structure, you have all of these confluence factors. Let's say you're stacking 1, 2, 3, 4, 5, perfect. Then you see this and think, oh, isn't that a buying candle? Maybe I won't take the trade. It's not. This is actually a selling candle, a hanging man. So I did want to cover that as it's not very, very common. So that's the hanging man. And the last two, which I absolutely love, which I'm sure a lot of you do as well, is the morning star and the evening star. Why is that? Well, first up, morning star. Where would we utilize that? Well, essentially, let's say again, we're looking for a buy setup. This is a scenario. We're looking for a buy setup. Price moves down, it moves down, and we get this type of candle, and we get slight doji candles. You can see it's very similar, a very small candle. And then what price will do is it will retrace a similar size to the move down. It's almost take this candle and put it here. We've got a morning star, as you can see. So it's very, very close to those candle shape formations. Same type of psychology. What do? We then set our buy order here to then be moving to the upside. So combining this on a reversal is very, very powerful and a strong indication. What we normally see, especially if you have a morning star on the weekly and the daily, that's a very, very strong indication this is going to be moving to the upside aggressively. So very, very good to know. And it's exactly the same in the reverse. I prefer evening star formations. If I'm completely honest, naturally we're looking at more sell setups. It's how the market's been this year as well. So that can, of course, change, but I really, really do like evening star formations, because what you've got is you've got a push up, you've got a bit of indecision or a bit of exhaustion here, and then you've got a full retrace. So it's almost this, just more accelerated, because you've got this in between that. So that's more indication this is actually coming to the downside. So putting sell orders on the break of that
combine that with a structure, this is one of my favorites on the evening star. So as you can see here, candlestick patterns, they're great, but you need to know how to utilize them. If you're just looking at random candlesticks in the middle of nowhere, you're going to be tagged in and tagged out. You're going to take unnecessary losses that are not congruent with your plan and not going to set you up for success. However, when you combine these with structure, these are lethal. So it's important that you understand these. There are tons of candlesticks patterns. We focus on these few because we found this to be the most beneficial. Of course, there's a few others you might want to add in, but you get the concept. Structure first, candle shape secondary.
So as you can see, guys and girls, that these are the candlesticks that we focus on. There are so many different, formations and patterns, but if you focus on the few that repeat themselves on a regular basis, they're very, very profitable. That is how you keep it as simple as possible. Now let's take a look at indicators, or a lack of them. So at Falcon, we don't use indicators. The Falcon strategy is an accumulation of trading in the markets for over 9 years of my experience. Now, I have personally refined and evolved the strategy to create a simplified approach to trading the markets, which removes the need for typical trading strategies and indicators. You really don't need them. They can work, but a lot of the times it's noise and clutter and actually just blurs the vision, if you like. So if we want to look at things from a simple perspective, it can be very, very powerful. So we remove the large number of indicators that most traders will focus on and use, and what we focus on is raw price action. And this essentially is consisting of market structure, market nature, combining that with patterns, etc. This is refined and simplistic. This approach, it allows us to forecast longer term moves, and it really does capitalize on the potential that the market presents with us. Most people don't realize how much potential there is in the markets because they're too cluttered with their charts. When you strip it all back, you see it for what it really is. Now let's take a look at how a Falcon chart are simple, clean, easy to understand, opposed to using indicators in your analysis. Let's take a look at that now. So now let's take a look into why we don't use any indicators. Now, first up, there are lots of people that trade different ways, and some people have found it very profitable to trade with this type of way, with the EMAs, with the support and resistance, and all kinds of indicators. Now, this is a chart that is not hugely messy compared to some that I've seen out there, but it's important that you understand the thought process of why we don't use any indicators. And this is going to give you an insight just before we get into the whole entire strategy. Now, one of the main reasons is that I've personally seen is that people just hold themselves back because they cut trades short due to imaginary barriers within the market. Now, when you're learning something new, you're going to have to sometimes reprogram and rewire what you look at, and that's exactly what you're going to learn. So starting off with this chart here on pound dollar. So as you can see, I've got support, resistance, MACD, got some moving averages here. Nothing too crazy. There's lots of other things like Fibonacci, etc. And a lot of them can work. We've just found simplicity is a common pattern with a lot of successful traders within our community. So let's just declutter this ever so slightly. So we have the 200 EMA here. We can take this off, and we have the 20. Let's take off the 20 EMA here as well. And we can take off some support and resistance. So as we just kind of slowly declutter the charts, let's get it to something that's a little bit more simplistic, right? So already that looks clearer. Now we have our MACD, we can of course delete that as well. And we're just slowly getting rid of the clutter, and we'll go into a little bit of detail. So what we found is with things like support and resistance, you cannot argue, sometimes it does reject off of here, and it goes through, goes back through. There's lots of variations into people that close trades down due to imaginary barriers when they haven't seen the whole entire structure, right? I was there too. But I found by removing those and literally focusing on the most recent price structure, it was the most accurate form. So you might be thinking, well, what are we going to put on the chart? Is it just price? Well, what I want to show you is just a raw price for now and just the 50 EMA, and give you an example. If we take a look at price here on the weekly chart, as you can see, when price was moving up in this area and then we broke below the weekly 50 EMA, this is where a lot of people would close their trades short. Well, imagine if you knew there was a pattern here, a particular pattern that had a probability, a 90% probability of playing out longer term to reach anywhere near the lows. Well, this is what we was covering, weeks and weeks ago, because we understood this. So then what happens? You've got two types of traders. Sometimes you could have two traders that take a very similar trade. One trader closes their trade down short. they cut their trade short due to, having a profit target in EMA, for example. And there's another trader understands the pattern identification. And what do? They hold the trade out for slightly longer term. Now, one trader makes, say, 3%, and another trader makes 10%. They've taken the same trade, one's held it for longer due to understanding the structure with no real mess of support and resistance or anything like that. Then, on the other hand, you have to look at it like this. Losses will always be there. We all take losses. Losses are inevitable in trading. But your ability to capitalize on trades, that's different. So let's say, for example, those two traders, they take a few trades, they take 3 losses each for the month. It wouldn't be unusual. They've made 1 profit on the 3%, one trader has, and he's lost 3, right? Risking 1%, so he's back at break even. One trader took exactly the same trade on pound dollar, banked 10% on that trade instead of 3. He's taken the 3 losses, and he's at a net 7 for the month. What's the difference there? They both took the same trade. One trader capped themselves by closing it down due to an imaginary support or resistance, etc. And one trader looked at the pattern and thought, do you know what, there's a probability of this playing out, and they held it for a little bit longer. Honestly, it may seem simple, but sometimes it just comes down to just that alone. So if I go to the daily chart, for example, this particular trade, you have to ask yourself, if you previously was trading any kind of support and resistance and you saw this here, would you have held your trade through the daily 50 EMA, or would you have seen it as support? Would you have seen it as a barrier? Well, what if I told you we were expecting it to break the daily 50? The daily 50 wasn't even there for us, because you have to understand that it's a lagging indicator. And a lot of the times when there's heavy momentum, the market doesn't pull back to the areas you want it to. So you might feel like a trader where you've seen these big moves go, it doesn't pull back to the EMA, and you're thinking, well, I haven't got a criteria. Well, this is exactly what you're about to learn within Falcon, to learn how to capitalize on these moves. So ultimately, the big reason as to why we don't use them, and we just focus on clean price structure, patterns, and market nature, is because you just leave too much profit on the table. And ultimately, if you're capping your trades at 1%, so you know that you're only risking 1% per trade, losses are inevitable, but you're not losing more than 1% per trade. And if you understand how to hold trades for longer and capitalize on its full potential, then just simple mathematics, you're increasing your odds in succeeding. And it really is that simple. So now you know just briefly why we don't use any indicators. Now let's take a look at what we look at within Falcon with our charts. So, as you have pound dollar here, what would be something reasonable that we would focus on at the moment? Well, we would be looking at the previous low here, looking at the overall bigger swing, and we would be predicting this move here to the upside. So we're looking at pound dollar, and we're seeing that 90% of this move has already been completed. So there was a 90% probability that 90% of this channel, which you're going to learn more about, would fill. And look at where we are. We're pretty much at the lows. So we know at any point there's going to be a very big move to the upside, either in these areas, like so, of this particular pattern that we have here, which is an expanding, which you're going to learn, or we're going to create one more move to the downside, tag this low, and then we have the longer term move. By not bringing in trend lines from 1984, 1982, and things that just don't matter, we focus on the most relevant price structure. And that is what we've personally found to give us the most accuracy. And that's the key thing. It's just looking at the simplicity of things like that. So, looking at something like this, we can then write a particular pattern. We can look at that structure. We're using the trend lines as a guide, not as absolute. The pattern is far more important. So if we took this pattern for what it is, we rein in the trend line, we delete that for a moment, we look at the bigger picture, and as we've already structured with our rays and trend lines, which I've shown you, now we have this to focus on. So then we can look at two things, and we can say, right, once we understand the strategy, of course, which you're going to learn in episode 3, we can see the simplicity of this trade. Now we can either look at areas of value to buy here based off of the structure, and our target can be the most recent high here. This gives us huge opportunity to the upside, either from this expanding pattern or this low. This gives us a huge edge by not putting in these imaginary things. Now imagine if we went back to looking at some support, resistance, and just adding in things that have previously rejected that you think that's going to hold any relevance, then guess what? You're going to take a trade, for example, even if you would take a trade here, and you would cap your trade here, you'd close it down, and then guess what? It just breaks through. But when you don't understand what patterns are there, well then of course you're going to hold trades, short. You're just literally going to leave it there, take profit, and think that's a great trade. Capping yourself. You're limiting your growth. and you're taking the same trade that a lot of other people take utilizing a different strategy. So sometimes that is literally one of the biggest reasons why people don't succeed, and they flirt with the break-even -1 just because they don't know how to capitalize on the trades. They take good trades, just don't stay in them long enough. Well, that's exactly what you're going to learn. So again, just decluttering that, looking at the price structure, and again, we have a very, very high probability that this will either head to the low here and then move to the upside, like so, with our original target being this part here as the middle correction, which you'll learn more about. So essentially this is the move up, this is the middle section, and then the move up to the upside with a longer term play on the pound pairs across the board. So looking very nice indeed. And we understand, you know, it's important to realize that when you trade things like support and resistance, let's say you look at this as a support, it's not that there's no support and resistance in the market. It's just it doesn't always have to be horizontal, and it doesn't always have to be what happened previously. This is why we utilize the most recent touches to give us more accuracy rather than looking from something from here, because that's no longer relevant as much as what we originally thought. And we've tested this over years and years of data, and of course when you do your back testing, you'll see exactly that. So that's what we predominantly focus on, and it gives us a huge edge within the market. And what you'll also find as well is that often when you see price break, let's say a support like this, you will see it as a retest, right? A retest to then continue. What we see it as is, what does the pattern tell us? So for example, if there's a particular pattern that occurs here, well, we're expecting it to break this low, catching people on the wrong side of the market, and then guess what? We break straight back through. Have you ever experienced that before? You probably have, where you felt like it broke a significant support and then it completely retraced back through, and you thought, well, I didn't expect that. Well, got news for you, we do expect that. That's what we anticipate. That's what gives us an edge. And we only know that through pattern identification, which is exactly what you're going to learn. So very brief understanding there. Hope that clears up a few things and you're ready now to take full advantage and really dig in with your Falcon experience of understanding just how powerful it is when you understand these variations of patterns.